Ed Morse, Citi Research Global Commodity Strategy Head. Ed, it's good to have you here. Yesterday, we got that reflex bid into crude oil up about 4%, although it only brought prices back to where they had been maybe a week earlier. So how does the supply-demand dynamic change, if at all, with what's going on in Israel now?
So actually, the price dynamic hasn't changed. There's also all sorts of scenario possibilities of how it might change, but we haven't seen them unfolding, and it really is a function of, how much this battle is going to be constrained geographically and how much it might spread. So, there are a couple of constraints on the horizon that people think about, but as we saw in the price action, it really wasn't embedded in any kind of risk that the market was looking at. One of them is the story in the Wall Street Journal of a week ago that the Saudis were prepared to lower the price if they get the combination of a deal with Israel and a nuclear deal with the United States. It doesn't look like that's going to happen anytime soon. So that's something that might have happened by the end of the year, and it still might or might not. But it's not affecting prices today. And the other is, what is the response going to be to Iran if the world decides that Iran was really behind what Hamas was doing? Is the U.S. going to strengthen the sanctions and be a little bit more scrupulous about when to have a blind eye to where Iran might be violating those U.S. sanctions? That's also up in the air. It's a possibility for, X months from now, but nothing at the moment is really changing the supply-demand balance for oil.
If that's the case, let's say a week ago, prior to these events, what was your expectation for where prices should go from here? Obviously, there was a pretty sharp pullback from the recent highs. We never got to 100 on crude. Where does it leave us?
Well, it leaves us kind of in part at the mercy of financial flows. Financial flows were pretty robust in getting us to the price of $97 Brent. We had a phenomenal increase in that length of managed money from the beginning of the third quarter, where the ratio of longs to shorts was about 2.6 to 1, a very low level historically. By the third week of September, that went up to 13.6 to 1, the highest level since even before the Russia-Ukraine crisis broke out. That was clearly what was driving the upward movement of Brent prices. It came off a lot before the Hamas attacks, and it's still not growing. I think we're looking at a market which is seeing inventories beginning to turn around. They're beginning to grow on a gross basis. We're moving into refinery turnaround season, which should see crude oil inventories building. We're turning into a season with much lower demand than the summer. August is traditionally the peak demand month of the year, and it turns out that we didn't have much of a gasoline season anyway. So, we think that prices were already coming off faster than we had expected them to. We're looking at prices now that we didn't expect to be here until like the middle of November based on expected inventory build. So I'd say we're more in a bearish camp now than we might have been had we not seen that price decline.
So given, all of those probabilities that I know you're considering and others in your seat are considering, are you still in that bearish camp given just the overall risk that is overlaid on top of the overall supply and demand picture that you are seeing? Are you still in the bearish camp?
We're in a bearish camp because, you don't turn off supply that's coming into the market with just a small turn. We have a lot more supply than demand. Our expectations are about 1.5 million barrels a day more supply than demand next year. And nothing has changed our view that we're going to be in an oversupplied market yet. There's plenty of wiggle room between, growth of supply of 1 million barrels a day less than we're expecting to see. And that would still be a weaker market. So, no, we haven't changed our mind on that. Obviously, this is an unstable, volatile environment, and there are plenty of things that could happen domestically in a country like Iran or Iraq that could change our mind on supply developments. But so far, we think OPEC is going to struggle to keep prices at the level that they want to keep it.
All right, market seeming to reflect some of that. Ed, thanks very much for the time today.